Welcome to the weekly wrap for Friday the 17th of July. I'm Jessica Amir, a market analyst with Bell Direct. Well, the Aussie share market climbed 1.7% to Thursday, helping to claw back some of last week's 2.3% fall. Now the ASX 200 is 32% up from its COVID-19 March low. Now this week we had a six-factor news sweep. Firstly, business confidence returned to positive territory in June, supported by growth in profitability and employment. Keep in mind, though, that the data was collected pre-Victoria's lockdown. Secondly, we saw 211,000 jobs being added to the economy in June, almost a full recovery from the 228,000 who lost their jobs in May. But note, this doesn't factor into account Australia's second most populated state entered lockdown on the 8th of July. And thirdly, new home sales roared up 78% in June, but not quite enough to offset weak record sales from March to May. Now, the growth was supported by the government's $25,000 home builder grant, encouraging people to build or rebuild from June to December. And fourthly, on the commodity front, the oil price hit a new 3-month high as US cut supply. And the price of iron ore rose to a new 11-month high, benefiting from a 35% lift in Chinese imports in June compared to May. And China's coal imports also rose 12%. And amid COVID-19 vaccine hopes and better than expected economic news in the US, the gold price fell 0.9% from its 9-year high that it hit last week and now tracks at $1,798 US. Now, these factors explain who made the Snakes and Ladders ASX 200 weekly leaderboard to Thursday. Stocks linked to the economic recovery climbed the ladder the most. Oil and gas business Cooper Energy, COE, rose 11%, hitting a 1-month high. Whitehaven Coal, WHC, followed up 9%, with Fortescue Metals up 8%. Now, on the flip side, recessionary outperformers slumped. Avita Medical, AVH, lost 15%, which still doesn't dent its 938% surge this year. And Mesoblast, MSB, fell 11%, but it's still 57% up this year. Now, moving to strategy, firstly, consider increasing your exposure to online retail, discretionary spending and online education stocks. The government announced a new $2 billion job package this week. $500K of that will go toward running new courses to train school leavers and the unemployed. $1.5 billion will go to apprentice wage subsidies, which means online shopping might not drop off as expected post-September, when JobKeeper, job seeker payments are expected to end. And secondly, rethink your oil and gas exposure. We know in August, OPEC and its ally countries plan to increase their production, meaning more oil will be in the market while demand is low. So you could expect the oil price to fall or definitely see some volatility. And thirdly, look at rebalancing your portfolio, factoring in how social distancing has affected restaurants, pubs, gyms, CBD office stocks, toll road operators and airlines. Aussies using cooking websites has spiked. The Google search for at-home exercises hit an all-time high. Average road traffic has slumped, and there's a lot less people in the CBD. But a steady stream of people lining up at supermarkets, alcohol shops and fast food restaurants. Now, just looking at one example, restaurant revenue fell 25% from FY19 to FY20. Pub, bar, nightlife revenue is expected to follow. Now, the industry body Restaurant and Catering Australia does not expect to see a recovery until 2021, especially as 30% of accommodation and restaurant revenue is from international tourists. Now, thinking about strategy ideas, when analysing your food and beverage exposure, think about whether you want exposure to stocks like Retail Food Group, RFG, which is closing down stores. Perhaps look more closely at KFC franchisee Collins Foods, CKF, and Domino's Pizza, DMP, because they're both seeing strong sales. For the shift from drinking in pubs to at home and eating more of your own cooking, review your pub exposed stocks like ALE Property Group, LEP, and Red Cape Hotel, RDC. Think about tilting towards stocks like Dan Murphy's, BWS, Cellar Masters, Owner, Woolworths, or the owner of Liquorland, First Choice Liquor and Vintage Cellars, Coles, or the owner of IGA Liquor and the Bottle-O, Metcash MTS. And with the move away from working out in gyms, consider shifting focus from companies like gym owner Viva Leisure, VVA, and instead turn to stocks benefiting from outdoor and lockdown fitness, like the owner of Rebel Sports, BCF, and Macpac Super Retail Group, SUL. And with less people in office buildings, consider commercial real estate trusts or property ETFs that you hold. It could be worthwhile looking at pure industrial real estate stocks like APN Industrial REIT, ADI, and Centuria Industrial REIT, CIP, benefiting from strong industrial investment. And lastly, consider there's less people moving around the country. Toll road operators like Transurban TCL is seeing an earnings squeeze, along with Qantas, Regional Express and Air New Zealand. Alternatively, think about Alliance Aviation, AQZ. It's hit another all-time high amid fly-in, fly-out demand at the mines. So there's plenty to consider. On behalf of everyone here at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. Bye for now.